All right, let's get right into it. Today, we're going to unpack the economic thesis of investor Lawrence Lepard. He makes a pretty bold case that the entire fiat currency system, money that's backed by governments, not by something like gold, is basically on a collision course with reality. And he's got a very clear idea of what we should do about it.
And this quote right here just cuts right to the chase, doesn't it? Lepard uses this metaphor of the Titanic, and it's not just for drama. He's trying to frame the choice he believes every single one of us is facing. The stakes, in his mind, could not be higher.
So, here's how we're going to break it all down. First, we'll look at why Lepard says the Federal Reserve is in an impossible spot. Then, we'll jump back in time to a historical parallel he points to. After that, we'll dig into why he calls the dollar the Titanic, and finally, we'll check out what he calls the lifeboats.
Okay, let's kick things off with Section 1, the Fed is trapped. According to Lepard, the central bank is stuck between a rock and a very, very hard place.
You see, the Fed has two main jobs: keep prices stable and keep as many people employed as possible. But here's the problem Lepard points out. Those two goals are now fighting each other. Inflation is still way above their target, but the job market is starting to look a little shaky. So what do? Do they hike rates to fight inflation and risk a recession, or do they cut rates to save jobs and let inflation run wild? It's a classic trap.
And this is how Lepard reads between the lines of what Fed Chair Jerome Powell says in public. He believes that behind all the carefully chosen words, the Fed knows it's cornered. They can't just come out and say it, of course, but the message, Lepard thinks, is pretty clear. They are out of good options.
Okay, so let's move on. Lepard argues that to understand what's coming, we have to realize this isn't some new, unique problem. We need to look back at what he calls history's inflationary echo. And that brings us to this key idea, yield curve control, or YCC. Now, it sounds super technical, but the way Lepard explains it is actually pretty simple. It's basically when the government has so much debt that the central bank has to step in and print money to buy that debt. Why? To keep interest rates from spiking, which would make the government's debt payments totally unmanageable.
And guess what? This isn't just a theory. We've been here before. Lepard points right to the period after World War II. The U.S. had massive war debt, and they used this exact policy, yield curve control, to manage it. And the result? Well, it wasn't pretty. By 1947, inflation hit what Lepard calls a face-ripping 18%. Just imagine that for a second.
And just a few years later, in 1950, it happened again, surging all the way to 21%. Lepard uses these numbers as a massive warning sign about what can happen when the money printer gets turned on to solve a debt problem.
So the takeaway here is crucial. Lepard is absolutely convinced that history is repeating itself. He sees the same setup today, huge government debt and a need to keep interest rates low, and he concludes that this inflationary cycle we're in, it's not over. Not by a long shot.
And this leads us right into Section 3, which brings us back to that central metaphor: the Titanic is sinking. This is where Lepard really lays out why he thinks the whole system is fundamentally broken.
He really frames the whole thing around this one huge question. We all remember the massive money printing from the 2008 crisis and again in 2020. Is that going to happen again?
And his answer is a resounding yes. For him, it's not a question of if we'll see more printing, but just how they'll do it. He argues that every time the system gets into trouble, the only tool they reach for is the monetary fire hose. And each time they use it, the amount of water they have to spray gets exponentially bigger.
But this is where the argument takes a fascinating turn. Lepard says that eventually inflation stops being about spreadsheets and data points, and it becomes about psychology. Once people truly start to believe that their money is losing value, they change their behavior. And that change in behavior is what actually pours fuel on the fire.
And this is exactly how that psychological loop works. It starts simple enough. Prices go up. Then workers realize, hey, my paycheck doesn't go as far anymore, so they demand higher wages. Of course, companies have to pay for those higher wages somehow, so they raise their prices. And boom, you're stuck in a spiral that just feeds on itself, making everything worse.
Okay, so if the Titanic is really sinking, what's the plan? That brings us to our final section, seats on the lifeboat. This is where Lepard shifts from the problem to what he sees as the solution. He points to two main assets that sit outside the traditional system. You've got gold, the classic safe haven that's been around for thousands of years, but then you have Bitcoin, which he calls the better lifeboat. And the reason is simple. While we can always mine more gold, Bitcoin's supply is absolutely, mathematically, unchangeably fixed. There will only ever be 21 million, period.
And this quote pretty much sums up his entire worldview. He sees the current system as broken. Yeah, but he's actually an optimist. He truly believes Bitcoin offers a way out, a path to solving the problem and building a new system on a foundation of sound money.
Now, if you want to understand just how big he's thinking, just look at these numbers. He's not talking about small games here. He sees Bitcoin potentially hitting $250,000 in this cycle, $1 million in the next one, and eventually $10 million or even more as the dollar loses its value over time.
He also has this really interesting theory about the relationship between these two lifeboats. He sees gold as the canary in the coal mine. It moves first because it's the first to sense that something is wrong with the currency. But Bitcoin, well, Bitcoin is the high performer. It moves fastest and captures the upside in a much bigger way. So for Lepard, seeing gold hit new highs is a massive green light for Bitcoin.
But honestly, this right here might be the most important point in his whole argument. He says we have to stop thinking about the dollar price of things. That's not what matters. The real game is about purchasing power. The question isn't how many dollars is my Bitcoin worth? The question is, what can my Bitcoin buy? That's the only thing that matters.
And this is his ultimate vision. He genuinely imagines a future where our grandkids aren't talking about prices in dollars. They'll be talking about them in satoshis, the smallest unit of a Bitcoin. In that world, the US dollar just becomes a historical remnant, something kids learn about in history class.
And we're going to end with this last thought from Lepard because it just perfectly captures everything we've talked about. He's sure Bitcoin will hit $1 million. What he's not sure about is what $1 million will actually buy you then. It's a question that forces you to rethink everything you thought you knew about money and value.